Scott's questions there. If I look back to 2022, that was, I think, the last time we had kind of a significant commodity cycle. And if my model serves me correct, net price mix across the business was up kind of mid-teens in 2022, which was a big factor in helping to offset that. Correct me if I'm wrong, but it sounds like there's maybe not as much flexibility on a go-forward basis around pricing, given some of the competitive dynamics. So could you just walk us through what other levers you might have in the business to help offset that commodity inflation that we're seeing and, kind of anticipating to continue to roll through in 2027?
Yeah, let me start on that, Jim. I would say, clearly we have to look at productivity measures, which is part of our every annual process, and throughout the year, we're looking at ways to be more efficient in the bakeries and the network, et cetera. We took action coming out of Q1 when we saw softness on the top line. That will accrue from a tailwind perspective as we exit 2026 into 2027. And as we said on the prepared remarks, that's roughly around the $20 million tailwind we'll have going into 2027. The other area is going to be the price pack architecture. As Ryals mentioned, coming together with new products around small loaf, bring to market innovation and sourdough, areas where the consumer has headed and where the consumer is. We're probably under-penetrated on a portfolio basis. We have great products coming to market in the near term, but we're probably under-penetrated today. So when we look at those factors, it gives us confidence that, yes, price probably is not going to be the only lever to overcome the inflation. And as I mentioned earlier, a lot more work to do around that as we continue the 27 planning process.
My follow-up question is on DKB. In the prepared remarks, you guys touched on marketing pullback there. Just love some more commentary around, is that a kind of a temporary reshift where maybe other brands need some more support? Are you guys reworking the marketing plan there? Did it shift kind of within the portfolio, maybe towards some of the innovation versus kind of the core fresh bread offering? Any thoughts there would be great.
Yeah, Jim, it's temporary. I mean, it's the way we laid out the cadence of our marketing and promo spend this year. So we focused a lot at the beginning of the year with you may recall the Rock Your Reset campaign that we did with DKB. And then also, to your point, also a focus on back to school. And so we should see more normalized levels of promo and marketing spend with DKB for the balance of the year.
Great. Thanks. I'll pass it on.
Thank you. As a reminder, to ask a question at this time, please press star 11 on your touchtone telephone. Our next question comes from the line of Mitchell Pinheiro with Sturdivant & Company. Your line is now open.
Hey, good morning. I was looking at your fresh bread volume decline, which was 9.5%, and that's a big number. But I was surprised at how well the gross margin held up despite the unit volume decline in fresh bread. How do you manage that?
Hey, Mitch, this is Anthony. I mean, clearly price had a big contributor in the price mix from a volume decline. So our pricing definitely was a positive contributor as it relates to overall. But as we look forward into the earlier comments, there's other variables that we are looking towards as we think about the balance of this year in 27, and price pack architecture is one that I mentioned earlier. But price was definitely the contributing factor to answer your question.
And so sort of negative, fixed asset leverage. You've been able to manage that, or how should we think about that?
Yeah, so from obviously the restructuring had some cost out in COGS. We've had good productivity as it relates to the in bakery network, but clearly that's our highest fixed cost. And while we're looking at network optimization, that is more complicated and takes much longer to execute. But we're clearly constantly looking at ways to be more efficient within the four walls of our bakery and our network, and that drove some benefit, but that becomes harder and harder with the volume declines. So as you can imagine, that's something that we're looking at and continue to look at as ways to optimize going forward.
Okay. And then, as you look at the third quarter, do you expect volume declines to moderate?
Yeah, we don't break that out. As I mentioned, we expect Q3 year on year to be down from an overall sales perspective. So that's going to be, price and volume based. And then Q4 to have a little bit more stabilization as the new wins get more fully ramped. That's probably the most color I can give you in terms of the near term.
Okay. And then I guess two more questions. One with Dave's Killer Red. You mentioned that consumer shifts in consumer preferences as a reason that helped pressure the unit volume decline. What are you referring to?
Yeah, Mitch, it's Ryals. Mostly, we think that it's the growth of sourdough. It's pretty remarkable, actually. I mean, that subsegment of the category has already grown to be a $1.3 billion subcategory. So it's been pretty tremendous growth. And in DKB, we only have sourdough on the West Coast currently. But as we mentioned earlier in the innovation pipeline, we have solves for all that. I would say that is certainly one area, and probably at least some amount of price sensitivity relative to Dave's. But I don't, as I said earlier, I don't think it's all price. It's a combination of price for some consumers, but also offering and product attributes that are driving some of that decline.
Okay, thanks for that. And then this final question is where do we stand with the comprehensive review? Where are we in that process? Are we close to the end? Or is this a continuous improvement comprehensive review? Could you shed a little light on that?
Yeah, well, I think we're always in the mode of continuous improvement. But in terms of the formal initiative of the comprehensive review, yeah, we're finished with that and beginning to execute on it. So a lot of the things we've talked about today, whether it's innovation or focus or better execution, all of those are folded in and are the result of that comprehensive review.
Okay. All right. Thank you very much.
Thanks, Mitch.
Thank you. And I'm currently showing no further questions at this time. I now like to hand the call back over to Ryals McMullian for closing remarks.
Hey, great. Thank you, Shannon. I just want to thank everybody for taking time today and joining us for questions. We very much appreciate your interest and support of our company. And as always, we look forward to speaking with you again next quarter. Take care.
This concludes today's conference. Thank you for your participation. You may now disconnect.